The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Be faithful to that which exists nowhere but in yourself. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow down 588, NASDAQ off 179, S&P's down 92, gold contract down $6.90, traded $1,152 an ounce. Silver down 57 cents at $14.72 an ounce. Platinum down 30 at $9.89 an ounce. Copper down 5.5 pennies at $2.24 a pound. Light sweet crude down $2.27, trading at $38.18 a barrel. Bottom line, folks, hard to believe, but that oil market wants to go after its 2008 low, which is $32.50. Bonds want higher price. Had the 10-year up 10 at 9 ticks, 128.31, big volume. Gave it up on price, but big volume. That means it's going to be right back up there. 30-year up 6 ticks, 160.12, same type of setup there. Big volume, gave it up on price, got into, no, the 30 didn't get into its high yet. 10-year got over its high. That's saying the 10-year is going to go back topside. King dollar down 1,580 ticks, 93.42. King dollar took apart its June 18th swing point. That is saying King dollar wants to get down to 85. We're at 93.42 right now. Euro up 206 at 115. And the yen down 3.5 pennies at 118.66. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. And the world of the S&Ps, let's take a look at it. What do you have? Besides the mess, folks, bottom line is that this S&P, we've been talking about this October 2014 area for a bit. Bottom line is that it hits it in 3 days. Pretty insane, but that's what we did. So if we take a look at the monthly basis, what you're going to see is this. In 3 days, the S&P just went from 2076 down to 1867. Right now, the cash we're laying out there at the 1904 level. If we take a look at this here, let me put up the SPY first. If we put up the SPY. Okay, so the SPY closed out at 189.20. The volume, of course, is a monster out here today. It did 475 million. The 475 million, by the way, blew away the October swing point, which I suspected it was going after because it was a high volume low. That high volume low there had 380 million. So what does that set up? It sets up two different things. It sets up, number one, that it's broken a trend that's pretty extraordinary. And the bottom of that trend, when we actually take a look at this SPY, basically lines up that the SPY can get down to about the next move would be 165. You know, well, first off, okay, so this is how it works. At the February 24 low, let me put this on a weekly first. So your next level, we took apart the October level. You know, the October level, the high of October, it was 191. The low is 181. We're at 180 right now, 9 right now. We took it apart on the daily basis. It's only Monday. It looks like we're going to take it apart on the weekly basis. We did 100 million more shares than we did then. So what does that set up next? Well, your levels next would go like this. 179, which was what's established in February of 07, and then 165. So that's the way that's set up right now. You can actually make a case when we take this on a weekly basis. you can make a case that the whole trend is broken and, you're down to 137. But take it step by step. Take the NDX 100. What do we have with the Qs? The NDX 100, what you have with the Qs is this. The Qs closed out at 98.63. The October 2014 level that we're talking about, the high of that level is 94.99. We did, on a weekly basis, 424 million. On the daily basis, I believe we have taken that apart too. On the daily basis, on the daily basis, we had done 108 million shares. We did 143. So what does that set up? That sets up, we also took that apart on the daily, on the weekly. Well, I suspect we're going to take it apart on the weekly because, of course, we get 4 more days inside the week. Bottom line, that sets up lower prices coming at us. Gold contract. What do we have with gold? Bottom line, for a vicious market on the way down, gold held. Gold market out here, what you had, we had the price spread out here was, GC. Okay, so the price spread out here today was from 1145 to 1169. We did 254,000 contracts. You got to a new high, and what that means is that when you get to a new high, you're going to push higher. Gold wants to run up to this 1207 mark. I expect what you're going to see 1234. So there's some real action inside that market. Now, the difference, which is pretty dramatic, is that the contract itself, bottom line, got to higher price. If we go take a look at a few of the gold equities pushed into a high. They didn't hit high on Friday, and then they sold off. They sold off this afternoon. If we take a look at Rangel first, Rangel did 1.4 million shares. So we'll see how, right now she's at 62.45. We'll be able to see how she handles the 62 area tomorrow. We take a look at Agnico Eagle, AEM. Agnico Eagle is trading at 24.87. There she is. 24.87. Agnico Eagle also first pushed into a highs, couldn't handle higher price, back down. We'll see how Agnico Eagle handles the 23.98 area, because there's no doubt the amount of pressure out there is extraordinary in all the markets. Now, oil. What do we have with oil? Bottom line, man, this is just wild, okay? Oil not only wants lower price, but she had some acceleration on the way down out here today, just as all the markets did. The oil contract, oil contract is trading at 38.24. Why isn't this CL? 5C, I'm doing, we're in 2005. So she came down to 439,000 contracts. 32.40, folks, is the low that was established in 2008. And the way this is trading right now, it certainly looks like that's exactly where it wants to go after. We go take a look at the bond market. If we take a look, we'll take a look at the 10-year first. What you're going to see is that the 10-year moves higher with velocity, gives it up on price. He's still up, but bottom line, you gave it up on price. You're going to be right back topside. We did 2.3 million contracts in the 30-year, in the 10-year rather. We hit 129.28, which took out those highs from April. I expect we're going to be right back up there. It's Tom O'Brien's TFNN. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 588. NASDAQ was off 179. The S&Ps were down 102. That's a mind blower, no doubt. On the open out here this morning, folks, you did have the NDX 100 limit down. And what limit down specifically means is this. So from tonight until tomorrow at 08:30 Central Time or 9:30 Eastern Standard Time, bottom line is that you have a 5% limit down. So that means that if, in fact, the futures go down over 5%, they'll be called the lock limit down. They can't trade. The only way they can trade as a lock limit down is that if someone wants to go in and buy to cover, or just buy, okay, they can buy. You just can't sell at any point. But you get to buy at that point that they are. Like this morning, they were 3,992, I believe, when they were lock limit down. That now, the whole deal restarts again at 9:30. What ends up happening at 9:30, it's not that it restarts. It comes off the 5%. Then it can go 7%, 13%, and 20%. Bottom line is that this was the first lock limit down that we had since the 2007-2008 downdraft. Pretty severe. No two ways about that. Now, we'll see how this does shake out tonight. What you do have overseas is that Asia's going to open first. Let's do Asia first. So if I look at the Hang Seng first, what you're going to have is this. Hang Seng took out its low. That was down $1,158 last night. You're at 21,000, and that took it out with lighter volume. Okay, so the Hang Seng was off from 28,000. We're 21 right now. That doesn't mean it's going to stop. Okay, let me just set this up for you. So what we do have is that you're at 21,500 and 18,285 is the high of the low. So that would be the first kind of place that I'd look for the Hang Seng to, basically come down into. What you'd really like to see is this. Because we're at the 24th of August right now, on the monthly basis, we had 78 billion shares there. We've only done in the Hang Seng thus far 27 billion. So you'd really like to see it hit that level this month. Because if you hit that level this month, which it's only about another, let's see, that's 800 is 19,000. So you get 2,800 down. If you hit it this month and rejected it, you would have a rejection of price on lighter volume. You know, if you don't do it this month, you have to wait a whole nother month because the volume is really light on the downdraft there. If you don't hit it this month and it stops right before it, that's monster problems. Why? Because then it will build cause to basically blow that through. You go to the Shanghai. What we have with the Shanghai was down 8.49%, down $297. You're at 3,200. Now that blew away the swing point. It did have lighter volume. That sets up the level right now of getting into 26.65. So we'll see how that 26.65 gets handled. That also is coming down in lighter volume, and you know we'll see how that handles it. It's important, you know, in all these markets, as we go through these markets, to really understand what's going on everywhere. The reason being is that it's a one world market. They trade differently, and they can be 2 or 3 months in between swings. But bottom line, once these numbers start going, they go in spades. If we go to the FTSE over in London, huge problems. That closed at its lows out here, blew away swing points. And if we take a look at the FTSE, what you're going to see, the FTSE absolutely took apart the October 14th level. Now, that is giving us more probability, number one, that our own S&Ps are not going to be able to handle that. The Dow already can't handle it. And what does it set up? It sets up, you're going to go to the next leg down in the marketplace. You know, you can do a couple bounces, but the overall trend is going to be the next leg down. Now, in the FTSE, we're at 58.98. The next leg down would get you into the 5,400, down into the 4,800. And if we take a look at this, what you're talking about here is that you're talking about, you know, really giving back 5 years and what? A year. It looks to me like the FTSE, this is actually a huge problem. Check this out. Whoa, baby, this is a huge problem. Okay, so check this out. This is intense. Okay, so the FTSE right now is at 58.98. This has already got into, oh, that's only 2011, thank God. Okay, so this got into the highs of the 2011 lows. The highs are 59.13. But that's saying now that this baby can go to the lows of that structure, and the lows of that structure is 47.91. So there's some heavy, basically, destruction inside the marketplace out here, and the fastness of the destruction, folks, is going to be problematic. The reason, even intraday today, you know, you had, if you want to see price spread, oh my God, it was about as good as you can get. That's as good as you get if you're trading it. The S&Ps, if you take a look at the S&Ps, the E-minis, and same with the NQs, the E-minis, you know, got down to a price point of 1831. First bounce took you to 1928. They bounced all the way up to 1950. So you can imagine, you're talking about 1831 to 1950. That's almost unheard of, okay? That's 230 S&P points, and then come all the way back to 1871 again, okay? Bottom line, fast, furious, all the above. They got up there, and if you have the out of time in the trade, guess what? They came into a swing. They couldn't take the swing out. The swing was 1962. The volume died in the vine. I mean, big time. Every 10-minute bar up here was like nothing. There was nothing behind it. And then when it gave it up again, it started giving up with volume all the way back down. You had that nice counter trend bounce when I was on the air at 3 o'clock for 1540. And then that couldn't hold. What we did have out here today is this, is that we got a big downtick today. We got one on Friday. What it takes to get a good bottom in, it takes 2 downticks. Then what it takes is that the 5-day trend to start running at about 3 5s, about 12.50 to 14. Right now you're at 290, 394, 70, 570, 670. You're at 670. It's not enough. You're only at 730 right now. 730. You're at 8. 8 doesn't do it, folks. Okay? You need that up there at about 12, 13, 14, and then what you need also is a rejection of lower price. So unfortunately, This bottom, if you're looking for a bottom, is not here right now. And it's going to take a lot more fear inside the marketplace in order to get that bottom established. The XLF, if we take a look at the financials out here, what we have with the financials ended up down 99 cents. When we take a look at the October 2014 level, that low was 21.55. The volume up here, let's go take a look at the volume characteristic that we were looking at. So that, see the same thing. That low had 109 million shares, and guess what? We did 113. Bottom line is that is saying that all those October 14 levels, okay, got hit today with much higher volume. That means that you're going to be back down at those levels, and it looks like, to me, that we're going to break those levels. You stay there, folks. I'm Mr. Kevin Hinks from TD Ameritrade is coming right up.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials closed down 588. NASDAQ was off $1.79. S&Ps were down 98. And as we do each and every Monday at 20 past the second hour, we have our man, Mr. Chris Wright. Now, Chris is going to be doing the show for Kevin Hinks tomorrow, folks, the TD Ameritrade Think or Swim option show at 12 to 1 Eastern Standard Time. And don't forget, folks, at TFNN, you can get all the programming. We start live programming 8 o'clock in the morning to 6 o'clock in the evening. Get it right on your cell phone, TFNN.mobi. That'll get you the full audio. You want to get the video, just on your cell phone, go to TFNN.com. Hit the banner on the right-hand side. As you hit that banner, bottom line, you're going to get the audio, plus you're going to get the video. Now, if you haven't test drove the TD Ameritrade Thinkorswim platform, folks, come over to our website right here, right now. Test this platform, okay? You can go to the platform. You can open the platform up. They'll let you trade with paper money. Bottom line, I use it every trading day, whether I'm trading futures, options, equities, or currencies. And bottom line, folks, today was the perfect day to see how this works. And I can tell you, my screen in front of me right now, I have 14 orders with 42 fills, and I'm flat. And guess what? It worked all day long, okay? That's as good as you get, because the bottom line is that this was a fast, furious day. Now, I am not professing that you should be out there day trading, okay? But the bottom line is that you want something that's stable, that's great. Guess what? Go do it. Chris, what's going
Good
on?
afternoon. Hey, it's been a fun day, a wild ride, but a lot of opportunity out there, and some interesting setups carrying out the rest of the week.
It's pretty intense. There's no doubt about it, man. So inside the, can you explain so what happens, folks, in a fast market? There's a lot of different things that happen in a fast market. One of the things that you should be aware of that I can basically, and Chris can do it, and we all can teach you how to go in and out of equities with limit orders and all this, but what you absolutely want to understand is that when you're placing orders in whatever platform you are in, you want to make sure you understand what is happening at that time and where you're placing orders. That's the first part. Now, because we get an option show on Tuesday, it's the best option show in the marketplace. It's at noon. You absolutely want to also understand the fastness of markets and, bottom line, how you should be placing orders. Can you just walk through the folks just a little bit, Chris, on a fast market of maybe what they should and shouldn't do?
Sure. So, a fast market definitely changes things pretty dramatically. Especially in options, you're going to see that the bid asks are going to be, quite a bit wider than you're used to.
Yes.
And, a lot of chop. I mean, you were seeing the SPUs are popping, 2-3 points at a time.
Yep.
And, when that happens, you have to give yourself a little bit more room. Otherwise, you're just going to get whipsawed out of the position right away. So, typically we recommend, trading smaller. Maybe if you're used to trading 10 lots or 20 lots, you cut that back a little bit so you can give yourself a little bit more room. Otherwise, I'm sure a lot of people kind of got picked off throughout the day. And
what you want to be aware of, folks, is this, is that at all times on fast markets, you should have orders in. If you're long, you're bringing them up. If you're short, you're bringing them down. Your stops, both ways. Because the price spreads out here are plenty to do that. And you want the market to take you out as you're going in and out. It's crucial. It's absolutely crucial, because what happens is that the spikes inside the marketplace, which happen all the time in fast markets, can help you get the execution in place, okay, which is pretty cool. I mean, it's pretty intense, though, there's no doubt. And, Chris, we haven't had a fast market for so long. I can imagine that there are a lot of people that, really don't understand a fast market, which I can understand why, too. I mean, we haven't had a fast market since 2008. You know what I mean?
Certainly, and especially kind of in the summer doldrums, it's kind of a nice change. But, something else to consider in these type of markets, like a bracket order, one cancel other order is pretty popular, where essentially, let's say you buy a stock at $100, or an option at X amount of dollars, you can basically set a percentage above, percentage below, and at that point, you kind of know exactly where your risk is at, and if it moves in your direction, you get out at a nice profit. If it drops, you get out at a price you're comfortable with. So, you just want to be very cautious in these type of markets.
Yes.
Even looking at the open today, we went from, showing, for example, on the Dow, we were drifting around 500, and 10 minutes later down 1,000. So when you flush out 500 points of Dow, you have to have those stop losses there, because
seriously, man,
you just can't ride those out.
No, because in this case, folks, it came back, but we saw in 2007, 2008, a few of them came back, and a few of them didn't come back, and that's where it turns into an absolute disaster inside your account. And what also happens is that when we had those NDX. We had it limit down, and don't go over your head, because if it's limit down and over your head, what can happen is that it can go limit down again, and guess what? You're blown up. You know, I'm sure you had quite an exciting day at TD Ameritrade Thinkorswim today, man. I feel for you guys because I know on a day like today, man, everyone has to be like on their toes in an extraordinary way.
Absolutely. And you know what, though? You know, this is what traders live for. You know, we love the activity. The excitement. It's really the best business there is on these type of days.
Yeah, no, listen, I agree. I mean, it's but you have to go through a few of them. That's the other side of it.
True.
No, you know,
That's true.
There's no doubt about that. So you're gonna be doing the show tomorrow at noon, right?
That's correct.
And it's gonna be intense, man. And so, what are we gonna be talking about?
Well, you know, a lot of it's going to be really just on the fly, just because we're at some critical levels.
That's cool.
You know, all across the board. For example, you know, we're right at 2% on the 10-year. So,
Yep.
you know, if we're significantly lower or significantly higher tomorrow, that you know, could have a big impact of what to expect. You know, looking at you know, for example, right now on you know, the Dow, we're down, you know, somewhere in the neighborhood of. Or, you know, on the S&P, down about 100 points, which is
Yes.
close to the low of the day.
Right.
You know, do we bounce off that first thing in the morning, or are we going to actually slip through that? And, you know, it's one of those judgment calls that, you know, we'll have to kind of look at very closely.
Sure. And, you know, what you do get, folks, okay, this is where this gets really intriguing, you know, inside the option market, is that when we start talking premium, we start talking, you know, decay of premium, all of the above, what TD Ameritrade is just amazing at, setting up strategies. You know, bottom line, we're not saying, you know, you put it on red or you put it on black, but what does happen is that the system itself can do all the work. What you want to make sure that you understand, though, is that what strategy you're putting on, what exactly that means. And, you know, tomorrow you just stay tuned right here at TFNN, and Chris Wright will basically walk you through it. And if you haven't test drove the Thinkorswim platform, folks, please go over and do it, because it's not only, I mean, today showed it. The bottom line, Chris, you know, you heard me when I started off. And believe me, I have this, I have a Bloomberg, and I have eSignal, okay? The bottom line is that all day long, folks, okay, guess what? It just was fast, furious, and it worked. And that is a testimonial beyond belief, okay? Because that is not easy to do, man. Unreal.
Yeah, you know, you look at you know, the S&P today. You know, as far as volume,
Yes.
you know, we hit almost 500 million. So there was some serious activity going on, and you know, I think a lot of brokerage firms are going to see some record numbers. You know, over like last Friday and again today.
No doubt. Well, listen, man, you have a great night, safe night, and we look forward to the show tomorrow, Chris.
Yeah, looking forward to see market conditions first thing tomorrow.
Yeah, big time, man. Have a great one. Have a
All right,
safe
thanks
one.
so much.
You stay right there, folks, to come right back. Dow finished down 588. NASDAQ off 179. S&P's off 100. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. We had the Dow finished down 588, NASDAQ off 179, S&P's down 96. Let's go to Shiv in San Francisco. Hey, Shiv, what's going on?
Hey, Tom, how are you doing?
I'm doing great. Yourself, man? I'm
doing good, thank you. Hey, Tom, so I have a question about GDX. Like, with the market down so much, I'm wondering why is GDX or gold not rallying that much? I took a position last week, but it looks like it's not going anywhere.
Let's take a look at it. So the GDX, folks, is the gold miners ARCA index. The low in this baby is 13. The high is 26. Now, inside this index, this is like the HUI, folks. You got Goldcorp, Franco-Nevada, Newmont, Barrick, Rango Resources, and Eagle. And just as Shiv says, the bottom line is that this is it wasn't affected until today. Bottom line, it came down hard too. So what you have here, when you're looking at this, tomorrow is going to be a big test on this, because what we have had is that I'm sure you heard me that last week was the first time, well, the last couple of weeks actually, that the gold and silver equities and gold itself was not going with the marketplace. They hit this baby today. There's no doubt. We came down 129 million shares. You are at 1414, and I want to see actually 1413 hold. And where I'm going with the 1413 is this. So we got to a high on Friday. That high on Friday saying now, it would want to go to 1918. You pull back today with volume, big volume too, by the way. You're pulling back into 169 million and 141 million. So we did 129. So we're pulling back into that area with lighter volume, but when you still have an expansion with volume, folks, it's not always a problem. But what you want to see, I want to see this get to a lower low tomorrow. And then reject the $14.13. If it doesn't, just get your stop in, man. Because that means that everyone they're throwing everything out once again.
Right. So with the market correcting that much, don't you think that gold should have rallied?
Okay, let me show you something. This is a great question. Okay, so the question specifically is that with the market a disaster, shouldn't gold rally? Well, in 2008, gold went from 1166. Let me get this. Yeah, 1,033 to 681 a heartbeat, man. And everything got killed. Now, this time here, it seemed like it's a little bit different. And we'll find out tomorrow whether it is or not. It does not have to go to higher price, though, just because it's gold. I like how the gold contract traded versus how it traded in 2008, though. Thus far, the destruction hasn't been done. If we go take a look at, let me show a couple individual stocks here so you can gauge this tomorrow. Rangel Resources was down 330. You did 1.4 million shares. You're trading at 62.45, and you want to see Rangel hold 61.41. If we take a look at Anico Eagle is down 152 today. You want to see Anico Eagle hold 23.95. We're at 24.67. And if we do Franco Nevada, FNV, Franco Nevada was down 258. This acted pretty good, actually. We did 2.2 million. That's going into 2.4 million as well as 2.6 million. But they all had some juice, so I expect you're going to see slightly lower price tomorrow, and we'll find out whether we get a rejection of price. But the larger issue that I'd like you to wrap your head around is that because it's gold, don't think that can't go down either.
Okay.
Okay, man. Have a great one. Have a safe one. Let's go to Ed in Milton, Mass. Hey, Ed, what's going on?
Hey, Tom, how are you?
I'm doing great. Yourself, man?
Well, this is like the third or fourth meltdown that I've been through, and this is at least your third or fourth meltdown. I know that you've been through them. So you kind of get, you remember what it was like to have a 200-point or 100-point NASDAQ swing. You say, oh, my God, I haven't seen that in a long time.
We haven't seen that in, that's right, 7 years. No, 8 years. All right.
Yeah. Well, when the dot-coms were busting and you were getting short during those days, we were getting a lot of lock limits days.
Yes.
I thought it was something that happened all the time back then. I said, oh, what is it? Oh, they just halted it. They just say, no, you can't trade anymore. So, but to have it today was on a Monday was almost predictable after a 2,000 Hang Seng's 2,000 points. So
it was. If you were trading, folks, plenty of us were up. Not all night, but we were up very early. And that's the first time that, we were watching that in the middle of the night. First time I had been for a long time. There's no doubt. And, it's important to keep your eye. And, I mean, Mr. John Logan, folks, he kicks us off at 8 o'clock in the morning here. Stay tuned on your cell phone at TFNN.mobi. He does a great job. He's broadcasting right now out of North Carolina, but he has another office in the Philippines. He had a guy on this morning from Hong Kong. It's clean information, it's good information, and it's important that you understand what's going on in those markets, because it's very hard, just as Ed said, it's very hard for our markets to do anything when, in fact, you have markets that have already traded, and they traded at their lows, and they closed at their lows.
Right,
So
the DAX and the Hang Seng and Shanghai leading the world ahead of us. Is a difficult thing to overcome. If you've never traded through one of these, if you are day trading, the swing points become extremely valuable. That's where you have to have the patience just to wait for those major inflection points, and then you go for it, and that's how you do it. Otherwise, you will get beat up real quick. But if you wait for those swing points, lower swing high or higher swing low, that's where you make your money.
And it's important. And folks, we are not advocating day trading. Okay, it's a paradise if you really understand it, but it is a different. It's actually the execution going in and out is actually also different. Okay, specifically what I mean by that is that you have to be thinking ahead of that deal and ahead of the swing points. So, if you're going to do it, do it. If you traded 100 shares before, do 10 to 20 until you get used to it. Trade 1,000, do 100 until you really kind of, because, as I said to Chris from TD Ameritrade, what also happens is that, markets can go down, folks, and that's serious business. So whatever you're in, at all times in fast markets, you make sure you put a stop on the other side, because if your system goes down at home, if the system goes down, it's at the exchange, you'll get executed, and that's crucial. It's absolutely crucial that you have orders in at all times.
Always have a stop. Never pull it.
Yeah.
Protect your capital. Protect
Cooking,
your
brother.
capital.
Have a great one, man. Have a safe
All right,
one.
man.
You stay right there, folks. We got Marty coming up from Worcester, Mass. Dow finished down 588. NASDAQ off a $1.79. S&P's down 92. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we had the Dow down 588, NASDAQ off a $1.79, S&P's down 92, all with volume, folks. Okay, so they went into those October 2014 area, have volume. That's saying that lower prices are coming at us. Let's go to Marty in Worcester. Hey, Marty, what's going on?
How are you, Mr. O'Brien?
I'm doing great, man. Yourself?
Well, could have been, but could be worse. Could be worse. Thank you. My main question is I've got 2 fundamental questions about the dollar, but first I just wanted to mention in reply to the last caller, the swing points work quite well on longer-term charts, too.
They do. They do. They do. There's no doubt. It's, yeah. The swing points are where the market talks, walks, and squawks, folks. No doubt.
Well, anyway, what I wanted to ask you about, I read in a couple of places, but I haven't heard anything generally about it, that one reason the dollar is going down, because it's important that, you know, how are we going to get from where we are down to 85 or so? I mean, I was thinking 88, but wow, 85. And there's 2 things that I've heard. One is fundamental things. One is that countries like China are selling dollars to cheapen their own currency, and that brings the dollar down. And another thing that occurred to me was since we went off the gold standard, we've been on an informal oil standard in a way. And I've heard people talk about that. And I was wondering if the cheap price of oil could also affect the, status of the dollar. And I'll shut up now.
Well, what has happened is this, is that China absolutely is, I'm speculating is selling dollars, okay? And this is why. The official statistic coming out of China was that their money, that currencies that are in the bank, went down $593 billion. That was the largest downdraft since 2002, so or 2015.
Yeah.
What happens, folks, is that the yuan was floating against the dollar. Then they basically said, okay, we're going to take that off. As they were doing that, okay, so the yuan doesn't absolutely croak, the only way that they can basically let it come down easier is sell dollars. Now, the Chinese government has so many dollars, it's unbelievable because we buy so much from them, okay? So that's not going to be a problem in the context of, where this dollar wants to go.
Uh-huh.
It is a problem, however, that I suspect it's going to keep going, because when this was happening, like I was even looking at it, because it's counterintuitive to what you think. We knew that Europe was in a mess. It's like, okay, man, every time the dollar's going up to 98, man, technically you could see the seller. It was like, man, who's selling this dollar? The higher probability was as soon as the yuan got croaked, the trade that I'm explaining to you is really not a trade. That is a way to manage currency so that the yuan doesn't get croaked beyond belief. So in that aspect, it's like, okay, man, that's what's going on. And so what that adds up to is that adds up to a competitive devaluation of paper money throughout the world. That being said, what that should add up to is that gold, silver is going to be worth more money, because all money is a swap and a barter. So that's kind of how that's laid out. But I suspect that's what we have happening, man. And that's just saying, hey, lower dollar, and that doesn't matter. I suspect that, by the way, King Dollar will still be the king across the world, but everything will be worth less in correlation to the gold market. Now, what's going to be really cool, Marty, is watching out how oil reacts at that 32, because listen, the oil's not going away either. There's no way. I mean, this is just, in the oil market, that is a squeeze extraordinaire, just getting everyone out because they're over their head. They're margined over their head, man. Cooking, brother. Have a great one, man. Have a safe one. Folks, don't forget, we program 8 o'clock in the morning. Listen tomorrow morning, right on your cell phone, TFNN.mobi. You'll love John Logan's program. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Have a great one, safe one. Look forward to speaking right here tomorrow. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests, and
well, listen,
keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Bernard Bernstein. Miracles happen to those who believe. Market-wise, let's take a look at it out here. We have the Dow down 548, Nasdaq's down 161, S&Ps are off 68, gold contracts down $7.20, traded at $1,152 an ounce. Silver down 56 cents at $14.73 an ounce. Platinum down 30 at $9.89 an ounce. Light sweet crude down $2.41 at $38.04 a barrel. Bonds, oil, folks, is going to go after the 32 mark, which is just a mind-blower, no doubt. That was the lows that were established in 2008. It wants to go after that number. Bonds, you had the 10-year up 14 ticks right now, 129.04. 30-year up 18 ticks, 160.24. Both of those want to go to new highs. We'll see how they get up there. They certainly have the juice today. They were a lot higher. Bottom line, you get volume top side. They're going back top side. King dollar down 1,600 ticks at 93.38. King dollar, folks, wants 85. It's going to be really wild watching this whole thing shake out. But it basically took apart the 93.30 today, took it apart with volume. Next stop is 85 on that King dollar. Euro is up a buck up 200 ticks, 115.06. You got yen down 3.5 pennies at 118.58. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the S&Ps, folks, you get volatility. We got everything that's out here in spades. Okay, so if we go over to the S&P first and we take a look at the S&P, this is what we have happening. There she goes. So let's put the S&P up. We're going to put the SPY up. And bottom line is that the SPY out here got to a low out here today of 182, I believe. Let me just get this in front of me. So we got to a low out here of 182. You're at 190. Well, we bring this baby back, and what you're going to see is the bottom line is that the good old October 2014 level, that's what she was gunning for. That's what she got. That low there was, we hit 182, 181. Yeah, 181.92 is the number. Now, what we're going to do is this. We're going to close inside of that, and we're going to have higher volume. So bottom line is that that's your first leg down. We've done 369 million shares out here, and if we go take a look at this and see the correlation inside of that, when we got down there before, we've done 380 million shares. So what that says and what that sets up is that now you have a high volume low with volume. You took it apart. That says we're going to lower price. Now, we go into the NDX 100. We take a look at the 3 Qs. What do we have with the 3 Qs? What we have with the 3 Qs is this. 3 Qs out here today. Actually, this is a trip in itself, too, because what had happened, folks, is that the NDX 100 was limit down overnight, right? At about 9 o'clock this morning, it only can go down 5%. So 2 different things end up happening when that happens. Number one, there's the only way that an NDX 100 order will get executed is that if it's at the limit or over, they'll execute the order. They won't execute any more sell orders. Bottom line, what that does, that throws a tizzy into the Qs because even for the hedging mechanisms, with the 3Qs, it's like, okay, you can trade the 3Qs, you can't trade the NDX 100. Bottom line, they get into the 3Qs. The Qs go at $84. The low of 2014 was 90.24. The high is 94. Right now, we're at 98.67. That was down. There was a few ticks down there. What we do have, though, is that you have the lower low, you have juice behind the low, you have volume behind the low. That is saying that this baby's not done. Now, what we have had, okay, so let's go to the Dow Industrials. The Dow Industrials absolutely just took apart the 2014 lows inside the October lows. And the Dow is still below them. The low we're talking about is 15,885. Okay, so now what does that mean? Well, you took out the low, you took it out with volume, so guess what? Next stop, you're running down to 14,500, which is another 1,300 down. That being said, in order to make short-term bottoms, what you need is that you need a couple large down ticks, you need some fear in the marketplace, and then you need a rejection of lower price. That gives you a short-term bottom. What we have had thus far is this. On Friday, we got a down tick of 1457. We just got one of 1400, minus 1400. What we don't have, however, is that you don't have the trend lining up, because thus far, the trend's up there. The trend right now is 2.94. You absolutely don't have rejection of lower price. I expect what you're going to see here is that right now with the Dow's down 615, the Nasdaq's off 181, S&Ps are down 83. If I put up the S&Ps, the E-minis for a second, we'll put this on a 10-minute. What I suspect you're going to see, there'll be a difference today in the aspect of how we have closed versus how we will close. We're at 1889, and I expect what you're going to see coming into this close is that we can get up to somewhere about 1912. So what's that? That'd be like us being out $60. That's kind of how this will probably shake out. So we'll see how it does. But bottom line, folks, is that hopefully you had stops in, because it's a disaster out here. There's no two ways about it, and this thing's not over. And if I've heard anything on most of the financial news out here, it was that bottom line is that it's not the end of the world and all this. Well, guess what? It's not the end of the world, but it's certainly the end of the market as we've known it the last 6 years. When you get this type of volatility inside a market, bottom line is that it doesn't go away like the next day. This will go on 3, 4, 5 months. It could go on 6 months. We'll see how that shakes out. If you have been in front of a machine, you know that the market's been fast, furious, all of the above. You can expect more of that. There's a lot of destruction that's out here that's going to take a long time to get fixed. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials down 583. The Nasdaq's up 174. S&Ps are down 82. Going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we have the, here, percentage-wise, this is where we stand right now. You have the Dow Industrials down 3.7. You get the S&Ps off 4.2. The NASDAQ is down 3.5. Overseas, what we had out here today is this. You had the CAT in Paris down 5.3. The DAX in Germany down 4.7. Spain was down 5. You had... over in Asia last night, it was just a bloodbath over there. You had Shanghai down 8.4. The Hang Seng was down 5.1. The Nikkei was down 4.6. All folks with some big volume. If we go over and we just take a look at, I'll pull the Shanghai up for you a second. You can see how this baby is shaking out. The Shanghai took out its low, and we'll see how we took this baby out. So you had, and if this is an ABC structure down, it's going to be a mind blower. Okay, so the Shanghai, what the Shanghai had done is this, okay? Shanghai had got, off its highs of 5,100 rather. First leg down, took it to 3,300. At 3,300, the government figured that, hey, listen, man, we're going to basically, take care of this market, make sure that the market's not going to go down any further. Well, guess what? Market goes from 3,300, does a counter trend bounce to 41. Goes south again to 35, goes north to 39, and then what it just did last night, it just took apart the low. Now, what it did do is this. We are at a price point of 32. We took out 33.73, and it's not an ABC structure on the way down, meaning you took out the price. The volume would have had more than 65 million. You did 33 million. You did half that volume. So that's the good news. We take this back, and we'll put this on a monthly basis, and it's like where can you hang out here? Well, 3209, this is what it would have to take. Is that a monthly? That's a monthly. Okay, that's pretty good. So in a monthly, we're going into 1.1 billion, and thus far, we've done 660 million. Okay, so here's your parameter. This is pretty cool, actually. The parameter would be closing at the end of this month over 3239, which should be pretty easy to do, by the way. So we'll see where that checks out. But it's going to be pretty cool watching that thing shake out, because that is one parameter that you want to keep your eye on, because that would be a legitimate deal, meaning when I say legitimate deal in the aspect of, okay, it breaks the B point, doesn't break it with volume, rejects the lower price, you know, in figures, it wants to do some kind of a bounce. That's about how she shakes out. We go over and we take a look at the DAX in Germany. What we have with the DAX in Germany is this. DAX in Germany got taken apart. That is trading at 9648. That baby has come down, and you know, this benchmark, okay, this benchmark of the October level, folks, is just all over the place. The high of that in the DAX was 88.72. We've come to 93.38. Bottom line, it's going to go after that number. You know, that's how this is set up. The FTSE, we go to the FTSE, the UK, we take a look at the FTSE. This she is. What we have with the FTSE was down at 288 today. We take a look at the correlation inside of that, and that just ripped it apart. Man, this is intense. Okay, so the FTSE is at 58.98, and at 58.98, it took apart the October level like in an extraordinary way. Now, as that sets up, as you're taking that apart, let me just see how this sets up. So that sets up the FTSE wants to go to 5,600. That's a big number, man. I mean, that's still another $298 downtown. So that level there, man, there's more pain that's going to be coming out here in a large way. If we go over and we take a look at the oil market, let's go take a look at oil. So what we have with oil is this. The oil market has traded down to 37.75 today, CL1. What you're going to see inside the oil market is this. We bring this back. Inside the oil market, you have the 32.40 area that wants to get tested. The 32.40 area is the swing low that was established in December of 2008. You know, so there's nowhere to hide in these markets. We go over to the bond market. Well, you actually can hide in the gold market, but here, let's do this first. We go over to the bond market. We take a look at bonds. This is what you have in the bond market. Bonds today, the 10-year did 2.2 million contracts. We hit 129.28, which was a new high. So what does that mean? That means, and you didn't hold price. When you hit a new high and you have volume and you don't hold price, you go right back topside, folks. So these bonds look to me like not only that they want to go back to over the highs of 129.21, but I suspect that if I take that level, it looks to me like they can go to 130. So what you do is this. You take the high, which was established out here today. It was testing the last high of the 3rd of April. You take the low. The low is 124.14. So the high is 129.21. So it's approximately 124. We got $5 approximately, okay? You add $5 onto the 129. That gives you a projection, a possibility projection of 134.21. We go and we take a look at the 30-year. What do you have with the 30-year? Bottom line is that the 30-year, you're trading out. You traded to a price point of 163.01. You've done 482,000 contracts. The high is 165.07. So we haven't hit that high yet. But what we have done, however, is that we've taken a B point out of an ABC structure on the way up with volume. And what does that set up? That sets up A point of 148.05, a B point of 160, so you got $12. Your C point is 156, so that gives you 166. That gives you a 172. That's saying that the 30-year also is going to go over the highs. And what that's going to be all about, I suspect, folks, is this. That's going to be all about the aspect that people just want to make sure that they get their cash back. It's not even about making money. It's about getting their cash back. The indices today are going to have monster volume. Inside those indices, we're already at 1.1 on the NYSE. The NASDAQ is just getting, it's pretty amazing on the NASDAQ. The NASDAQ's already at 2.8. You know, so there's big numbers out there. The Exxon, let's go to ExxonMobil. You can see ExxonMobil, that little baby, you talk about acceleration down with volume, all of the above, has it all. You were down 387. You're at 68.22. we go back and we take a look at where this is trading. This is going right after its swing low from 2008. That swing low is $56. We've hit $66 thus far. Chevron, we go take a look at Chevron, CVX. What have we done with Chevron? Chevron, there she is. Chevron has come down to a price point of, it's down $3.83. You're trading at $71.91. And the low on Chevron there is 55. You know, so this baby is not done yet to the downside. It's real nasty out there. That's the bottom line. And as you can see, what does happen is that the downdraft versus the updraft is about as intense as you can get. This is Tom O'Brien. This is TFNN. Dow Industrials are down 653. Nasdaq's off 194. S&Ps are off 90. You stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 662, the Nasdaq's off 197, S&Ps are off 92. Let's go to Stanley in Maine. Hey, Stanley, what's going on?
Hi, Tom. How are you? I just came in and turned on the computer. I hate to make you repeat yourself, but I heard you say CVX could go to 55. And what about XOM? Did you say 56 or 66?
Okay, so let's take a look at both of them right now. Let me just do this again. Where I'm going with these, Stanley and folks, okay, when you're looking at charts yourself, what you want to look at is that you want to look at the lows that were established in 2008, because that's what they're going after right now. that low, let me bring this up. It's a little bit cleaner for me sometimes.
I think you said 56. I wrote that down, but I could be wrong.
Okay, we'll start with ExxonMobil first. So she's down 390 right now, and whoops. Put this on a monthly. So what we've done is this: that low is $56.51. Okay.
Yeah.
What I'd watch like a hawk, I guess, also is going to be the 64.50 area. And where I'm going with the 64.50 area is this, folks. The first low that was established in 2008 was $56.51. That was in October of 08, right? Then what you did, you had a little dead cat bounce, okay? You bounced up to 83. Then you came back down, and we hit the 56 area, but the high was 64 for the month, the low was 56. What that was the test of the 08 low, okay? So if I know you're thinking of buying it, so what I would do is this. You could actually start making a scale at about the 64 level, okay?
Okay.
And you do 3 trades. If you're going to buy 100 shares, you buy 33, 33, 33. And you can start it out at like the 64 going to 56. Because what is happening is this, folks, is that it's coming into that area with dramatically lighter volume. It doesn't mean that it holds, but it's coming in with dramatically lighter volume. So your probability goes up a bit that it's going to hold. Now, at this level, just as ExxonMobil is right now, it's paying a 4.2% dividend. If we go over to ExxonMobil and we take a look at Chevron, you're going to see it's down 390. We're traded at 71.84. If we do the same exercise on this, what you're going to see is that the low that was established was 55 in 08. Then it bounced up to 81. The scale would start on on Chevron, kind of where it is right now, because the high of the test in March was 70. The low was 56. And that also doesn't have enough juice on the way down. So, I suspect they're going to test them down there. But if you scale in, and Chevron is paying a 5.95% dividend. So, my understanding is that you're going after the dividends, right, on a longer-term play?
Yeah, but also something, yes, a longer-term play. So in 10 years, you would hope it would appreciate, but the dividend would keep you alive as long as you didn't have a lot of downside, right?
That's right. That's right.
Okay, well, the next time you come up to Boston, let me know, because I owe you about 10 lobster sandwiches, because I wanted to bite so bad about 78, 79 on Exxon, and you kept talking me out of it, so.
Well, it's a beautiful thing, brother.
I owe you a lot of lobster.
No, listen, you guys growling and prowling out here with us. You guys make us, period. Without any customers or listeners, we wouldn't have anything, so we appreciate you being out here.
You know how everybody appreciates you and your whole gang, so. Yeah, it's been quite a ride with these oil stocks, huh?
It's amazing. What's amazing, folks, is that it was the XLE and really the oil stocks themselves that basically gave the information out that oil wants to go that low, because it's hard to comprehend that how can oil go from $100 back down to 32 when in fact, we don't have the type of mortgages that we have out here right now. We don't have, and if you're thinking about why is a downdraft this dramatic, my take is it just has to do that we're at highs for so long. There's always different types of, pullbacks that happen. This one here is going to be nasty, and it just has to do with high asset values, zero risk. It's not zero risk. What it is that people weren't worried about anything. When we don't worry about anything inside the marketplace, you've heard me say many times, the market's job is to take the most amount of money away from the most amount of people in the least amount of time. And I've seen some vicious downdrafts, but this absolutely probably takes the cake in the matter of 3 days. I certainly, that October 14th level, we've been looking at that for a long time, and the stocks hit it, but I certainly didn't think we were going to hit it in 3 trading days, which we did. So it's like, okay.
So would you have a preference? I know safety is a relative term from listening to you for years.
Yeah.
But just my personal opinion, and tell me if yours is different, is that XOM would be the safer of those 2 trades as far as stability and credit rating, or is that?
I think I would go for both of them, man. I think you're onto something really cool, man. I think it's really hard to buy them, right? But
Yeah.
I think that's, to me, that would be what a real investor would be doing. I mean, that's a reality, okay? It's like, oh, hold it, man. This is pretty freaking cool, man. You're getting ExxonMobil and it pays a 4.2% dividend, man. I'd start buying it today. I would. You know what I mean? And the same with Chevron, I mean, as long as you're going to keep it, you can be 3, 4, 5 years, man. You're gonna make some money. Oil's not going away, man.
I know that. Yeah.
Yeah.
All right. So one last thing. So would you go for the trifecta and throw in the XLE as the trade component and buy CVX and XLM?
No, I wouldn't. The reason being, okay, so watch the plan. You get a great plan, man. Your plan is the aspect of that ExxonMobil and Chevron is not going to go out of business. The probability is that they will keep their dividend. If they don't, they might bring it down a little bit. If they're going to keep their dividend, and you're looking for a higher price. The XLE doesn't pay a dividend, so don't do it, because then you'll take heat from the XLE, okay? Because that can go lower. But guess what? If the other ones go lower, man.
Yeah, you just sit.
You sit, man. You sit, put your hands in your pocket, and, and don't go over your head. One of the keys here, folks, if you're getting anything and you have a real plan, just don't go over your head. Because if you don't go over your head, you are going to be in nice shape, and, buy one of those monsters, man. Buy something that is not going out of business. Okay. And oil's not going out of business, man. Oil can go to 32, but guess what? Just like when oil was 100, the XLE came off the highs first. The oil contract didn't break for 3 or 4 weeks after that. And it's possible that, guess what? I don't expect, when you have a vicious market like this, you can't expect that you're going to basically make any money in the long side for another 3 or 4 months or something. Do you know what I'm saying?
Yep, I agree with that.
But guess what? You're in at the right price. And then you sit back and kick that back, and you're not chasing stocks. You're not going to be chasing ExxonMobil, when it's, $20 higher. You're going to be in great shape, man. You're going to be getting paid that dividend, man. So.
Okay. As always, Tom, thank you very much. And thanks for telling me to watch it like at Hawk at 82, because you don't want to buy it here, kid.
Well, listen, man. What has happened, folks, and I really appreciate it, I have learned so much over the years, and none of us could have learned this much unless we were all out here growling and prowling together, and I really appreciate it. Stanley, have a great one and a safe one, man.
Thank you, Tom.
We're going to be coming right back, folks. Dow's down 504, NASDAQ's off 141, S&Ps are down 70. Stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is off 528. The NASDAQ is down 146. You got the S&Ps off 74. Let's go to Paul in Newton. Hey, Paul, what's going on?
Hi, Tom. I listen to you quite a bit, and I'm just not a trader by nature, but I just learned so much listening to you, so thank you. And the conversation you just had with that fellow about Chevron and was just so informative. I want to thank both the caller and you. So I have what I think is a simple question. My instinct is to get an ETF and short the SPY at some point for a while. And if you think that's not a crazy idea, I'm leery of ETFs. What ETF would you use for a simple one-to-one inverse on the SPY?
Well, you just use the SPY.
Okay, FDY?
SPY. And you wouldn't do that. I wouldn't be doing that for a good, 2 to 3 weeks or something. The SPY, folks, somehow, some way, this thing is going to probably bounce up to 204, which would blow minds, okay? But
right.
I wouldn't be doing it right now. The way that the market's set up right now, we've had 2 down ticks, okay? So when you get 2 big down ticks, that's a good flush out, number one. Minus 1,400, minus 1,457. We've got the trend going. What we haven't got yet is a rejection of price. And, bottom line is that, we'll see how this shakes out right now. There's a good bounce going right now. If it gets the rejection of price, NQ, let me just see something here for a second. If you get the rejection of price, so right now we're at 81 on the Qs. We could get it's going to be close whether they get the rejection of price. Let me see what time it is. It's 15:44. That means they can get it up to 1119 maybe. And at 1119, that would be close to rejection of price. If we got it to 1196, that would be a rejection of price for sure. And then what you would have is that then you would get a heck of a bounce. That bounce would, the first day you'd have volume behind it. The second day you'd start seeing the volume dry up again very, very quickly, okay? And then in order to really understand, it's like, okay, now where does the bounce go to? Most times what you have, folks, is this. When you actually break down, which we did, you'll go back to the breakdown area, which is just a mind blower. Now, what we also have here is that we have 3 black crows. And 3 black crows, folks, are like sick. Because what happens with 3 black crows is that you can go all the way back up and actually test the high of the first downdraft. And if that's what we do, it'll be like insane. But if you get up there, as you get up there, you get up there with lighter volume. As you get up there with lighter volume, what ends up happening, that's where it falls apart. and then the downdraft starts again. So it's pretty intense, man. But just sit there and wait. Do not do anything, and certainly don't short this market right now. The money's was made. It was fast. It was furious. That's how short money's made. Now you just wait again, and it'll be hard. It'll be hard to short it. That's the bottom line, because it will look. Most of these bounces look like they're never going to stop, and it's going to look like you're going to get new highs and all the above, and So, okay, man.
Thank you. Yep. Thanks so much.
Okay, man. Have a great one. Have a safe one. If we go take a look at the SPY right now, you're going to see this. Just since I've been on the air, the SPY has gone from a price point of from 188 to 192. The NDX 100 has gone from a price point of let's see what she's doing. Where are we? Of 97.67 up to 100.50. There's a good bounce going, folks. And what tends to happen is this: is that when you get downdrafts like this, you get the bounces happening. Those downticks are really important. If you have my first book, I did it on my second book too. I'm trying to figure out whether I did the downtick on my second book too. The first book has the downtick, has the trend, has all of that above inside it. And at bottoms, they're nothing is 100% accurate. That's for sure. It's not even close. But when these things come in, what it actually shows is a flush out. That's how these things shake out. They're flush out on the way down. It doesn't take much to get the market going, and then simultaneously what you do have, like on a day like today, what you do have is that they got two separate flush outs going, and those flush outs were pretty extensive. There's no two ways about it. When you get something like that, it's basically set up for a bounce. And that's the deviance in the marketplace. It's absolutely amazing how markets move, but that's the deviance inside a marketplace. We take a look at some of the Dow stocks right now. You got American Express down 165, Exxon's down 250, you got Citigroup down 250, Disney's down 250, we got Honeywell down 250, IBM's down 333, Walmart's getting taken apart. Walmart was a big number too, folks. Walmart telling us that it took out that 12-year consolidation. That said a huge amount. There's no two ways about that. That was a huge bit of information that the market gave us, and it gave it to us in spades. Now, Walmart has a long way to go downtown. That's where this thing basically shakes out. It went down to 61 out here today. If we take a look at this, and you take a look at this on a 10-minute basis, a monthly basis, what you're going to see is that 63, this is even more intense. It already got back inside the 63 area, and we were dealing, bottom line is that all it had to do was get back inside the 72 area, and that got much lower prices coming at you, fast, furious, all of the above. Some of the higher volume stocks in this market right now, this is what you have. You have Facebook's down $3. You get Netflix down $6. Wells Fargo's down 2.3, Citigroup's down 2.7, and if we do go over and we take a look at the XLF, what you have inside that XLF out here, this is what you have happening. These ticks, there's going to be some weird ticks, man. This was on the open. There's no way it traded down to 1852, but that's where they did open. I suspect, though, no one ever got executed at those levels. Bottom line is that you can just even take, let me see, outside of the opening tick out here today, the low in the XLF is 2252. That's the way to look at this. But what you do have across the board is that you have high volume lows with higher volume. And what does that set up? What that sets up, folks, is that that sets up a return to lower price after you get some kind of a decent bounce going here, And, we'll see whether it can actually get the bounce going by the end of today. The NQs just went up to 21.27. It doesn't look to me like you're going to get it today. We only get 10 minutes left in the marketplace. They can finish somewhere up there, but it doesn't look like they're going to basically claim back all the lost ground that has been made out there. Right now, you got the Dow Industrials down 474. NASDAQ is off 147. You got the S&P's down 68. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 408. You get the NASDAQ off 130. S&Ps are down 63, and we'll see what kind of action we can get into this close. Bottom line, folks, is that you have a down market with volume, all of the above, and just be really careful. What you do have out here is that you get a high volume, low market. And what that says flat out is that, you know, after we get a little bounce out here, we're going to be down at lower prices, and we'll see those lower prices. If, in fact, those lower prices, you'll just basically take those lows that were established out here apart. If we go over and we take a look at the IWM out here, what you're going to see out here today is that the IWM, we're down 353 at the 353 area. We put this on a monthly basis. And what you're going to see is that you have come into the October level, the October lows. You've done it with volume. That says you're going to come back down. It looks to me like the IWM wants to come down to $80. And right now we're at 111. So when I look across the board here, this is something that has just started. Gold, yes, guess what? Gold held up, folks. Bottom line is that if we go take a look at this gold contract, what you have inside the gold contract, gold held up. We traded wide price spread, no doubt. We've gone from 1145 to 1169. You're at 1152. You've done 253,000 contracts. That 253,000 contracts gave you what? Gave you a higher high with volume. That is saying we went to 1169. That's saying gold is on its way up to 1207. We go over and we take a look at the dollar index. What we have with the dollar index is this. Dollar index got toasted, roasted, all of the above. It was going after its it's June 18th swing low. That was 93.30. It took it apart. It took it apart in spades, too. We did 141,000 contracts. I don't even remember when we've done 141,000 contracts inside the dollar. Basically took it apart. That sets up an 85 gold. That's what that sets up. An 85 dollar index, okay, which is really problematic. There's no two ways about that. That is a move that is down, fast, furious, all of the above. So bonds. Well, bonds want higher price. That's how this baby's set up. Bond market. The yield on the 10-year right now is 2.0. It looks like we're going to get over the highs that were established in April of 2014, and we can get 4 or 5 points over those highs. What we do know now is this: the bond market has gone into those highs with volume. Now, what that sets up when you go into the highs with volume is that you're going to go back up there, and more than likely, you're going to surpass those highs. So interest rates are going to go down. The whole deal totally makes sense now. Why? Because no matter what the gold contract wants to do, right? No matter what the Fed wants to do, the market is saying, guess what? The market's pulling back. It has juice on the way back. What does that do? That automatically gets people saying, hey, I just want my money back, and I expect you're going to see more of that, because what we still have out here, the cash S&P got down to 1970 out here today. We're at 1901 right now. It got down to 1867. We go take a look at this. We put this on a monthly basis. What we're going to have now is this, is that you not only get down to the level, but you get down to the level with way too much volume. So as soon as you're down to the level with way too much volume, what does it say? You're going to bounce. More than likely, it's going to be a monster ABC structure on the way down. And, when I go back and look at the SPY, if you want to see a longer-term deal of what this more than likely is going to do, it's problematic in a big way, because the next place that's hanging out here, we're at 190. The next place is like 116 to 130, man. That's sick. This is Tom O'Brien. This is TFNN. You stay right there, folks. You're going to be coming back with a lot more numbers. Dow down 532. NASDAQ off 159. S&P's down 75. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.